Stocks drift lower after a strong open as global uncertainties continue to weigh. Healthcare and realty gain while FMCG and oil and gas drag. Mid-caps outperform.
City Union Bank slips after RBI's audit assesses that the NPAs may be higher than reported by the bank, while a 20-minute delivery promise revs up jubilant Foodworks.
Shyam Metallics jumps after it acquires stainless steel maker Mittal Corp and draws up big capex plans, while Unominda perks up on a technology alliance with Sensex for Korea for wheel speed sensors.
The health minister will hold a meeting with COVID experts today in light of rise in cases in China, US, Brazil, Japan, Korea. Diagnostic stocks perk up, but players don't see a significant uptick in COVID revenues.
Crypto should be prohibited, else the next financial crisis will emerge from crypto, says RBI Governor Shaktikanta Das. He adds that cryptos have no underlying and trading in them is 100% speculation, unlike crypto CBDCs like currency notes, he adds.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me Sonal Putra as well as Mangalam Malu. We have a full house finally after a long time on Halftime Report, and it is turning out to be a day which is largely sluggish, you'd have to say, barring the mid-cap index at this point in time. So we have the Nifty, which is down around 32 odd points, the mid-cap index, which is managing to hold its head above the water. A lot of news to track over the next 60 odd minutes, considering that it is a holiday weekend, but nonetheless, there is a lot of stock-specific news which is still in focus. A lot of stocks actually buzzing on account of high turnover as well. So maybe just to name a few is Max Financial, Just Dial, UCO Bank, all of these from the broader markets which stand out in terms of a lot of turnover that we're seeing on them. Hi, guys.
Hi. It was a 120-point downtick that we saw from the highs or the opening highs on the Nifty. So that's telling you that on the way up, we continue to see some resistance. But important to know whether these levels will get supported just the way we saw a bit of a bounce in the second half of trade yesterday or not. The thing is that the screen looks much better today than what it was yesterday, primarily because the mid-cap index is doing well. So portfolios would be feeling happier. And yesterday, the mid-cap index actually underperformed the first hour of trade. So maybe today and in the last few days, the mid-cap index has been underperforming. Today's outperformance tells you that the lower end will be supported and there's perhaps nothing to worry about so much.
Perhaps nothing to worry about. The big cue, of course, is that it is the holiday season, right? So that is something that at least all of us are focusing on. For the markets, of course, continues to be under pressure. Some pockets which are doing well. We have the fertilizer pack, which continues to do well. Fact, for instance, is up 100% in the last 20 days. So that's the kind of momentum that we are seeing in certain pockets or certain stocks, so to say. Let's see whether the last couple of days, because the trading activity will be really thin and especially not much of a cue that we'll get from the global markets, which way things go for us. But it's not only the holiday season, it's also the season of big fat Indian weddings, which is underway. According to Confederation of All India Traders, a total of 32 lakh weddings have taken place till December 14 this year, with 3.75 lakh crore worth expenditure. To discuss more on the demand trends in the wedding season, we are now joined by Murugavel Janaki Raman, who is the founder and CEO of Matrimony.com, and Praveen Khandelwal, who is the General Secretary at Guide, joining us now to discuss all about the wedding industry as well. Gentlemen, good afternoon. Thank you so much for joining us here on CNBC TV18. Mr. Khandelwal, let me start with you first. I want to understand how did the wedding season in phase 1 is really panning out. You did make some kind of expectations. That is something that you put out, 32 lakh weddings with 3.75 lakh crore of expenditure. How does the actual number look like? What has been the expenditure and the wedding so far?
We must understand that it is after 2 years of COVID that 2022 is having an unprecedented interest towards the wedding season. Because of no restrictions of COVID this time, the wedding season has gone well. And remind me, it is the first phase which has ended on 14th of December. The second phase of the wedding season will begin from 14th of January. But if we consider 14th December the first spell of wedding season, you have rightly put that more than 32 lakh weddings took place, and we have surpassed the number what was projected, 7.5 lakh crores of rupees. I think we have crossed 4 lakh crores of rupees in this season. And a survey was conducted by Confederation of All India Traders in 35 cities of the country. And based on the information, as you are rightly putting in your chart, that was the you know the lowest figure that could be seen during the solemnization of wedding. So therefore, this year the wedding season is certainly going to be very high, and now our eyes are absolutely on the next phase, which is going to start from 14th of January to July 15th, and it is going to be a robust season, and ultimately the economy will be benefited.
All right, we take that point. Ultimately, the economy will be benefited, but weddings, etc., happen, once people meet. And the question is, how is that market shaping up? Muruga, always a pleasure speaking with you. If you could, just tell us, in the second quarter, your revenue actually declined quarter on quarter and grew just 4.5% year on year. What exactly is happening out there? Are people joining less, or are they joining other platforms which are available as well?
First of all, good afternoon and thanks for having me. See, what we've seen is that with respect to weddings, as said by Praveen, while weddings are back on track thanks to the end of COVID, but what we've seen during the COVID time was we saw the surge in the number of people signing up for the matchmaking platform. So that has happened. While we expected the moment to continue, that did not happen. So what happened post-COVID? We saw the sort of drop in the number of people signing up, meaning we didn't have the similar kind of the growth or uptick that we had during the COVID period. Basically, in terms of number of people looking for life partner, it has gone back to the earlier level of the growth patterns. So that had some impact on our growth in terms of number of people signing up on the revenue as well. So we are taking some step, and once again, it's come back to a normal level of growth. We see that combined with the new initiatives, what you are doing, plus the things are coming back to the normal level of the growth pattern, we expect the next year, the growth coming back to the early level of growth.
Okay, that's exactly my point, Mr. Khandelwal, that you mentioned yourself that there's a lot of pent-up demand, and there are weddings taking place just to celebrate what could have been a court wedding during COVID as well. So do you think that this year is an aberration, and next year we might actually see a much more sober figure when it comes to the wedding season? Or is this the new base?
Well, I think after 2 years of COVID, this is going to be a rising period, at least for next 1 or 2 years. This is point number one. Point number two is that, yes, the number of invitees in weddings have gone down, but the scale of wedding has been on a higher side. The people are now want to make more spendings. The destination wedding is something which is taking a very fast pace among the people, those who want to have weddings. So therefore, at least what as a trade organization we feel that for at least for next couple of years, that is till 2023 and 2024, there could be tremendous demand. And we must also note that almost 80% of one wedding, the 80% expenditure of one wedding goes to third agencies. So therefore, all this money has to come back in the economy, and certainly it is going to revolve the economy to a greater extent, and the kind of financial crunch the market is witnessing is certainly going to be eliminated with this kind of wedding season.
Point taken. Mr. Janakiraman, while we are talking about a lot of demand coming in phase 2 as well, big projections made for that as well, I wanted to talk about specifically for your own company. Are you capitalizing on it? Are you increasing your ad spends? They have increased to 40% versus 35% as a percentage of your revenues. And what does it mean for margins? Because they have seen a sharp decline quarter on quarter and on a YOY basis.
There's a couple of things. One is that when the business comes back, the growth comes back, we definitely see the margin will come back to the earlier levels, because we had a matchmaking operating at the very healthy the gross margins. While still we operated still at the gross margin, excluding if you look at marketing, we're operating at around 60 to 63%. And because of marketing costs gone up, we see the EBITDA percentage come down. So what do we see that once the growth come back, and we expect the marketing to be at a similar level. So that being the case, we definitely see that the EBITDA margins will improve. So far as the challenge was, the current year was, the growth was a challenge. As I said, we expect the growth to come back to the double-digit levels next year. And with the marketing, we expect to be a similar level. That means that that increasing revenue will move to the bottom line. That will contribute to the growth in EBITDA margin.
Right. Murugavel, I just wanted to understand a couple of things from you. Your overall subscribers are 8.9 lakh. That's pretty flat year on year so far. You expect this to cross 1 million next year. Even as that is happening, the average transaction per users declined. And the third part is wedding services, which is just about 2% of your revenue, doesn't account for more than 10 crores. You were expecting that to grow to about 100 crores as well. When do all these things happen for you?
A couple of things. One is in terms of number of paid transactions that actually growing at double-digit rate, and we expect that momentum to continue. What that the ARPU has come down on account of the multiple reasons, the discounting, plus also launch of new product offering. All these things factors having an impact on the ARPU thing. And as I said, the ones that the growth come back, which we expect to happen next year, definitely there will be increase in EBITDA margin. When it comes to wedding services, as you rightly said, that the business is a small percentage of our overall revenue at this point of time. However, we see that the business has been growing at a healthy pace. It's almost growing at a triple-digit basis. We expect that amount to continue because weddings are back on track. And also thanks to our acquisition of Shadi Saga, that was integrated into Wedding Bazaar. Today, we are the India's largest wedding services market services company. We definitely see that the wedding services business to continue to grow on a triple-digit basis. We expect sometime next year it may come to close to the break even. The plan is to reach 100 crore probably by next 3 years. And we believe we are on track. As I said, we are growing on a triple-digit basis, and we expect the momentum to continue. And we expect to achieve the number probably in 3 years or so.
Okay, Mr. Janki Raman, just before we wrap up this conversation, I just had a quick question. Do you feel the need to innovate now simply because of the kind of competition that we're seeing? You have a very traditional medium, but the market is changing. Mr. Khandelwal pointed out as to how the number of wedding guests are lower, but the extravagance is higher. So it's different as compared to what it was probably 5 years ago. Do you need to innovate? And are you?
As a company, definitely thanks for asking the question. We are pioneering online matchmaking. We invented various forms of matchmaking, be it elite matrimony assisted. And even this year, we launched a few initiatives. We launched Rainbow Love, an exclusive matchmaking app for LGBTQ community. We launched Techie Matrimony. And one of the important launch this year was it's called Jodi, Jodi, a matchmaking app for a non-degree holder in 10 Indian languages. Because today, most of the matrimony services are targeting the English-speaking population. We believe there's the opportunity in the non-degree holder, the people are diploma holder, +2, or people study 10th and below. The Jodi app is a very simple to use app and the price very low. In fact, we did launch a corporate package for Jodi. The company is employing large number of non-degree holders. They can buy a corporate package. They can offer Jodi product to help their non-degree holders, employees or the employees' families to find a life partner. We did launch a corporate package. A few companies signed up. So we continue to innovate and to continue to figure out, to ways to grow and ways to accelerate. We believe that, the innovations combined with the focus on the existing business, the wedding services, all these factors would definitely accelerate our growth in the coming years.
Okay. All right, gentlemen, thank you so much for joining us and giving us all those insights. So that's about the Big Bang wedding season has been very strong in phase 1. Let's see which way things go once phase 2 starts from 15th of January. With that, we'll slip into a short break. We'll get you an exclusive conversation with Dr. Lal Pathlab's Om Manchanda on post-COVID diagnostic industry trends and a lot more. Stay tuned. Welcome back. Still tuned into Halftime Report here on CNBC TV18. Well, the Health Minister will hold a meeting with COVID experts today in light of the rise in cases in China, US, Brazil, Japan and Korea. Diagnostic stocks on the back of this are witnessing a surge, but players are not expecting a significant uptick in COVID revenues. Ekta, what are you picking up? What does it really mean?
Well, exactly that. You know, at this point in time, nobody is perturbed with regards to the COVID-19 cases globally at this point. Just to put the news into perspective, like Sonal mentioned, the health minister is going to be holding a review on COVID-19 today. They are meeting amid the rising cases globally, especially in China as well as the US. Now, the lab companies that, you know, I did speak to briefly in the morning, they did say that, you know, currently COVID testing is insignificant. There has been no change which has taken place in the curve as we speak. Unless there are hospitalizations, there is severity which rises when it comes to COVID-19, they do not expect testing to rise. Remember that in the previous spot that we had, a lot of the people were actually just using home tests. So we had already seen that trend take place. If in case there's a different variant, if in case the severity is different, hospitalizations take place, then the game changes. But nonetheless, as of now, there's no change in the curve. Even if there is a rise in testing, remember that the diagnostic industry itself has changed drastically in the past 2 years. There's high amount of competition. So don't expect those kind of heady gains that we saw right at the start of COVID-19 when diagnostic companies did benefit. Now, in terms of what they did in the previous quarter when it came to COVID-19, Dr. Lal's Path Lab saw 91% fall in revenue. Metropolis, 84% fall in COVID-19 revenue in the previous quarter, year-on-year. Thyrocare down almost 100% in terms of COVID-19 revenue on a year-on-year basis. So it's become insignificant for them, really. Valuation comparison, they're still heady in terms of valuations, quite expensive, but they're off the peak that they were when you compare them to their 52-week high. In fact, I did catch up with Om Manchanda of Dr. Lal's in our special series on Medicine Box. This was a couple of weeks ago in their head office in Gurgaon. Listen in to what he had to say.
I think there has been a change on multiple fronts. First change that I see at a consumer level is that patients or in general public is largely aware about their health and they want to proactively take charge of in terms of their prevention of health, etc. So I think the testing in general is going up, is one change that I see. The second change that I see is that people are now looking for convenience. Earlier, at least, patients would walk into our labs, stand in the queue, but it's no more like that. They actually want home collections, they want to book online, pay online. So I think convenience is another factor that actually has happened. On the business model side, as you rightly said, a lot of players have come in and we are seeing entry of e-commerce players. We are seeing entry of hospitals now getting into retail pathology, and even some pharma companies wanting to come into diagnostics. So every one of them actually is trying to see that what strength they bring on table. Like hospitals generally have pathology lab on their own, so the back-end synergies are there for them. Pharma companies believe that they have front-end connect with the doctors, so they want to actually see front-end synergies. And e-commerce players are trying to say that we are trying to give a very convenient experience and also probably trying to give it a great value for money. So I think on the competition side and plus consumer changing, overall penetration levels of diagnostics have gone up in the recent past. Of course, this year, many diagnostic companies are up against a very high base of COVID, but I think that will be behind us after a few quarters. But in general, I am seeing is that landscape is changing, both from demand side, consumers are looking at something different, and as well as provider side, they are now providing much more convenient customer experience than ever.
But now that there's so much competition which has risen, you know, we've spoken about full body checkup at 300 rupees. We've spoken about, you know, how one of the online aggregators launched at 100 rupees in one of the cities. What is the discounting like right now?
See, in this business, if you study the P&L of diagnostics company, the reagent cost doesn't constitute much. It's a very large part of the cost structure is coming out of overheads. If you can actually do more tests per visit per patient, you are able to actually offer a better value for money. And in the recent past, a lot of bundling has happened and people are now selling these packages. So one is able to give much higher discount than what one would be able to do on individual tests or panels. That's one of the reasons you see a lot of discounting happening.
So what is the discount that Dr. Lal's has to give now as compared to earlier?
I think honestly, we have really not chased the pricing competition. we strongly believe that in diagnostics, quality is very important. And if you look at overall healthcare spend, diagnostics just constitute 5 to 10% of the overall total healthcare spend. And we believe that patients are fully aware that if they don't get this step right, the downstream cost could be much higher. So we have always focused on the core of our business, which is quality, and making sure that we help our clinicians and customers to do a timely diagnosis.
All right, with that, we'll take a short break. On the other side, we'll get chatting with Aditya Agarwala of Invest for Edu with some trading strategies. Welcome back. Let's talk about what's taking place in the F&O space, because in just the last few minutes, we've seen a sharp turn on the downside for the markets. In fact, the Nifty is now just hovering around 18,300 mark, which is closer to the lower end of today's trading range. And the Nifty Bank as well has fallen below the 20-day moving average. In fact, the Nifty Bank as well as the mid-cap index, if you just take a look at all of them, is the mid-cap index which is mildly outperforming, and that outperformance too has narrowed. It's virtually breaking into the red as we speak, and that has given bears a fair amount of gusto, because 18,400 and 18,450 calls have seen a serious amount of writing, and these are options, remember, that expire tomorrow. So 18,400 call almost across shares added in open interest for a 40 rupee premium, 18,450 call as well. What does this all imply? That, you know, today's high of the Nifty, 18,473, will be a stiff resistance, and above that we have the 20-day moving average, which has been acting as a stiff resistance already. There were some writers on the 18,400 put for a premium of 30 odd rupees, but that premium has now shot up to close to around 118 odd rupees, and that's telling you that, and the number of writers have come down as well. So that's telling you those people are unwinding their positions. Nifty Bank was the crucial index to watch out for. It was around the 20-day moving average for yesterday's trading session and today as well, but now it's broken below that. So the question is whether there will be some support here or not. The only index of the day that really stands out is the pharmaceutical. 8 out of the top 10 F&O gainers belong to the pharmaceutical pack. Highest open interest addition seen in a bunch of these pharmaceutical names, diagnostic/pharmaceutical names. And then we do have, a lot of these other stocks also, the likes of Dr. Reddy's, Divi's Lab, as well as Aurobindo Pharma, seeing a fair amount of long addition. So that's what the F&O setup looks like, seeing a fresh bit of sell-off in the afternoon. What does that mean in terms of charts? Aditya, your thoughts?
Good afternoon, Mangalam. Thanks for the show. There is a bit of a profit booking, no doubt, and markets have entered into a narrow range. We are in the month of December anyways. December month usually is a narrow range trade month. So on the downside, 18,300 for the day clearly acts as an immediate support. If that is broken, we could test 18,200 to maybe 18,150 on the downside. As you mentioned, Bank Nifty is something which is dragging the markets lower, and that is something which investors should keep a very close eye on. 43,000 on the downside is the immediate support. If that is broken on the Bank Nifty, my sense is Bank Nifty could be in for a good, healthy 2 to 3% correction from current levels. Along with that, if you take a look at the VIX, past couple of days, VIX is also trying to make a move towards 14.5, 15 levels. That is the resistance zone. If the VIX starts to trade beyond 15.5 amidst the rising concerns of COVID and all, maybe markets could be in for a knee-jerk reaction, and you could see some bit of a profit booking on the indices as well.
Okay, Aditya, generally when this fear of COVID-19 rises, we see specific stocks gain. Case in point would be Metropolis today, the likes of Glenmark, maybe on the back of a diabetes launch. But nonetheless, that's the theme that generally plays out, pharmaceuticals, healthcare. How would you approach stocks such as those?
So definitely, there is a bit of a movement on the upside that we see. And today is the first day, in fact, that we are seeing this kind of an up move. I would still wait out for these stocks to show some more resilience and a continuation of the uptrend, and especially in the names like Dr. Lal Pathla, Metropolis, or some of these pharmaceutical names like Sun Pharma, Glenmark Pharma. All these names are bouncing off pretty well from the lows, but I will still wait for a couple of more trading sessions to initiate fresh long positions in them. On the flip side, since market is a little on the weaker side, I could have a couple of sell recommendations. So Indian Hotel is something which is clearly looking weak at the moment. One could go ahead and initiate fresh shots for targets of 305 on the downside, and with a stop loss at 331 on the upside. Since I mentioned banking stocks are looking a little weak, and especially the private sector names, ICICI Bank is something which is looking weaker and can be shorted at current levels for targets of 860.65 on the downside with a stop loss at 920 on the upside.
All right, Aditya, thank you so much for joining us, taking us through your technical picks and the outlook as well. With that, we'll slip into a short break. Up next is our special segment, Value Add. We'll be focusing on Jubilant Food. The stock is buzzing in trade today. We'll get you more details on this one after this short break. Welcome back. Still tuned into Halftime Report, and this is our special segment, Value Add. We are focusing on Jubilant Foodworks. The stock is buzzing in trade today. Mangalam, what's cooking here?
What's cooking here? It's pizza which is cooking here, and it's pizza which is cooking extremely fast. The company has actually launched a 20-minute delivery across 20 zones in India. They have said that they will do that, obviously, without compromising on their riders' safety, etc. So those are things that we'll have to watch out for. But this 20-minute delivery barrier is a key milestone that they've broken. Because remember, about almost 10 years ago when they announced the 30-minute delivery, that was the industry benchmark, and that actually gave Jubilant Foodworks a fair amount of market share and headway ahead of that as well. I spoke to the management yesterday. We will play snippets of that conversation tomorrow and day after as well. But, here were the key takeaways. One, Sameer Khetarpal, in his first ever interview to the media, said that more than 50% of their orders were already delivered within 20 minutes. So why did they have to announce this? One, to, formalize this. And secondly, customers who actually received their orders in less than 20 minutes consistently were the ones who actually showed higher ordering frequency as well. So if pizzas are delivered earlier, then people will feel that, they should order more because it's the quickest that gets delivered. Portfolio across value chain, they have Pizza Mania, Gourmet Pizzas, etc. All of that will aid growth, and they will reach 2,000 Domino's stores in the next 18 to 24 months, and they will obviously continue to fine-tune their strategy around Popeyes. The interesting part is it puts the focus back into their core business, which is Domino's Pizza and delivery. A lot of the people were looking at it, as a Domino's plus, but now the fact that the core is doing well is good too. Russell Weiner, the Domino's global CEO, was there as well. He said that, India is the biggest market for Domino's outside of US, and they're actually using strategies from the India playbook for all their other global markets as well. No plans to increase any royalty that they charge from Jubilant Foodworks. And we've seen this, that every time, the global parent does come to India, we've seen that in the case of Bata, Nestle, etc. There is an increased focus on that territory itself. So that's a positive. And finally, just to add the fun element to this, at the start of this interview, when I was told that, I have just about 20 minutes to converse with the management, I did place an order on the Domino's app on my phone. And by the end of the interview, the pizza actually arrived. And it wasn't just an empty box, there was pizza under it.
Which pizza did you order?
I ordered a vegetarian pizza, but I'll tell you what, after the pizza came by, they apologized to me. They said that, Mangalam, you called for the pizza in 20 minutes. We're sorry, we delivered it to you in 19 minutes.
Oh my God.
But that's good to know that now it's 20 minutes as compared to 30 minutes. We actually ordered the same Domino's late on Monday night, simply because that was the only one which was open late in the night and would deliver in 30 minutes. So maybe that's the USP. But nonetheless, let's move on then. City Union Bank is slipping after the RBI audit has assessed the NPA numbers are expected to be higher than reported by the bank. Abhishek Kothari is here with the details.
To begin with, Ekta, the divergence is the difference between what RBI says should be a gross NPA level versus what the bank has actually reported. So for City Union Bank, the bank has reported a gross NPA divergence of 259 crore, which forms about 0.64% of the FY22 book. So gross NPA divergence is more than 13% of FY22 gross NPA. Remember that if it is above 15%, then they have to disclose to the exchanges. Less than 15% does not warrant a disclosure to the exchanges. This time it has been reported, or it has come to exchanges, given the fact that someone had filed for an RTI. So provision divergence is of a mere rupees 40 crore. Now analysts say that they expect the bank to report slippages of 400 crore versus management guidance of 300 to 320 crore in Q3. So bank could miss the loan growth guidance. Bank had given a loan growth guidance of anywhere between 15% to 18%. So provision impact is not much. It is just a 40 crore provision impact that they will have to take on the book. However, analysts say that the stock can decline as much as 15% from the current levels. Back to you.
Okay, that is City Union Bank. The stock is down 5% in trade. With that, we'll slip into a break. On the other side, we'll put focus on the API players as media reports are suggesting an increase in API prices in the last 2 weeks. We'll get you more details and analysis on that. Stay tuned.
Welcome back. Mid-cap index, like we spoke, has now moved into the red. The Nifty is below that 18,300 mark as well. But from a health standpoint, COVID cases in China have risen in the last 2 weeks by around 12 to 25%. Or rather, we have seen some sort of impact with regards to price of APIs in China that have risen in the last 2 weeks. Ekta, tell us the impact of that, the likely impact on companies.
Well, yes, it is an ET report which has indicated that the prices of APIs from China has risen in the last 2 weeks by 12 to 25%. Due to the rising COVID-19 cases in China, so then, there could be a possible shortage of drugs. They could be hoarding because in anticipation of rising cases there. So paracetamol, azithromycin, amoxicillin, especially antibiotics, they've seen a rise in terms of the API prices. Now, CNBC-TV18 has not verified the prices independently, but largely the trend, yes, exists with regards to the antibiotic APIs. Now, I did speak to a couple of companies. IOL Chemicals, for example, has surged around 15-odd%. I did manage to speak to the management, and they indicated that, they have seen prices of, or they're seeing shortage in APIs of particular drugs such as ibuprofen, paracetamol. Remember, paracetamol is one of the most utilized drugs during COVID-19 earlier as compared to ibuprofen, and a couple of others. And this is largely seen in US, EU as well as China, where there is a rise in COVID-19 cases. Overall, they're expecting a 10% increase in prices in case shortages increase. They do have a certificate to export to the likes of US, EU, Latin America, Middle East, but they do not have an export license for China. So they are assessing what is probably going to take place in the next couple of weeks. Maybe exports could rise to the tune of around 4 to 5-odd%. Now, other API companies or pharmaceutical companies that do deal with APIs, I did speak to them as well. They said that they've not seen a huge disruption in terms of prices or supplies when it comes to APIs as of now. This is more likely to be a temporary situation when it comes to any kind of API shortage or price rise. So that's the feedback that I'm getting as of now. Let's see, it's a developing story when it comes to COVID-19. That is Lupin, where they've received a US FDA nod for a particular drug. I think it's for seizures. It's to control seizures. So that stock is in focus, up 3.5%. Let's stay with the pharmaceutical space. We did speak to Sanjeev Prasad earlier in the day of Kotak Institutional Equities. Let's listen in to his outlook on the pharmaceutical space.
Pharma, honestly, you have to look at it on a more bottom-up basis. They have their own challenges. Many of them, US generic pricing, clearly there is no pricing power. You can make some money as long as you have a new product launch for it and you have some exclusivity around it, but that's about it. So, the stocks which you like in the pharma sector are more the domestic oriented stocks because, you are seeing decent amount of, growth over there. Most of the, at least the domestic part of the pharma company, that seems to be growing at about 10-12%, which is actually quite decent, and that's probably the business which we are much more excited about currently.
Okay, that's the view coming in from Kotak Institutional Equities on the pharma space, though that sector is really outperforming today. For now, we'll step into a break. On the other side, a commodities segment, Manisha Gupta joining in with Ajay Goel, who's the director at Shivaji Flour Mills. Stay tuned.
Welcome back. Joining us on the show now is Ajay Goel. He's Director Shivaji Flour Mills. And there's a big news clearly coming in for wheat, Ajay, and that is that the wheat prices have hit an all-time highs in some states, the important ones though, which is Delhi, UP, Rajasthan. We've seen 29 being taken off and 30 not too far away.
Yeah, absolutely right. So now we can, feel the dearth of wheat in the marketplace, and it's almost come to a boiling point, wherein, now people are looking out for wheat for cover post 15th Jan, and there was just one half a tender, just yesterday, and so there was a big response to that. So primarily now there's hardly any wheat in the marketplace, and this 29, 25, 29, 35 will slowly move on to 30, so that supplies keep coming into the market. Otherwise there's a dearth of supplies currently, and we're still waiting in anticipation for government open market. That has been, the talk has been going on since 2.5 months, but now it's been promised in January, so we are all waiting and hoping for it.
There is still no date out for the month of Jan. And as you said, so Ajay, what has been the highest wheat price until now and what place?
So as I told you in the past, it has touched 29 once or twice, but not managed to cross that. It's always taken a rebound downwards after it touched 29. But this time it has crossed 29 convincingly, and supplies are not increasing at that level. And this is at a time when we really don't have a full demand scenario. If the demand surge comes in, I won't be surprised if it quickly moves up.
And this is all happening even as India has banned wheat exports, even as the private holds a lot of stock. So while we are talking about, or we are expecting from the Indian government to release some wheat in the open market, what is the quantum that you guys are looking at?
No, so we are looking at as much as possible, at least 4 or 5 million tons, but that's practically not possible. So I think even 2-3 million tons will be good enough if it could release it in a rush in January without any further delay, and starts the process of tender or sale. Because even these processes take about 2 weeks to, so that by the time we actually physically get the wheat. So we're just awaiting that. If that doesn't come through by Jan, definitely there'd be a bit of a problem.
And it's not just India now. While the international markets clearly had seen a good amount of profit taking from its highs, but we do understand that there are concerns returning now in Australia because of flooding, drought in Argentina. Iraq also seems to be buying in the international markets.
Yeah, so we're still below the international market, so even imports is not going to be much of a parity. It can just augment supplies, but as far as pricing is concerned, we are still about $30-40 cheaper than the global markets right now. So I think this is the new reality, and there is after 2-3 decades, there's this huge price change, structural change taking place in price of commodities, especially wheat, which we can see.
Just for the sake of comparison, really, Ajay, because when we saw the edible prices run up from an 80 rupees a litre to 220 rupees a litre to come down to 180, and the consumers do understand that it's never ever going below 100, forget 150 as well in sense of the retail markets there. Is it the same case with wheat?
No, so I think wheat is still one of the really low-priced commodities, considering the quantum that the global output of wheat is. Even in India, we have about 100 million tons. So, but it is widely consumed, so it will have a larger effect across people. But still, this surge has happened only in this year. In the past 2 decades or 3 decades, it's been really a snail's pace at which prices have moved. So I think this is some sort of a correction compared to other cereal prices and other prices of prices across the world. This commodity has taken this big surge after almost 3 decades.
Ajay, even if the open market wheat does come out, it will be given to the bulk buyers there. So can we clearly from now on expect that most of the wheat products are on their way to get expensive too?
So that's a call. So people actually sell on the basis of price points. So a 5 rupee pack will continue to be 5 rupees, but maybe the grammage comes down, and so this is the way the retail market is operating. Maybe the bread weight is tweaked with, or there would be definitely all these people will have to think of some strategy to continue to remain in the market. And price rise or MRP price would be the last resort for them, but they will have to be compelled to look at it. Sure.
Okay. All right. Mr. Goyal, Manisha, thank you so much for joining us and taking us through that discussion. That's all about wheat prices today for you. And with that, it's a wrap on this edition of Halftime Report. Stay tuned. Business Lunch will take all the action ahead.